Hello and welcome to CNBC-TV18's Mumbai newsroom. I'm Sumaira Abdi and you're watching Your Stocks. Our two experts joining in today, we have Parthiv Shah of Tracom Stock Brokers and Kush Bohra of kushbohra.com, who will be answering all your stock queries. So gentlemen, thank you very much for joining in. Our first query today is coming in from Bengaluru, and on the line we have Monish. Hi Monish, good afternoon. How can we help you? Monish, can you hear me? Okay, I think we're unable to establish that audio connection. So let me read out the query that he sent in to us earlier. He says that he has 100 shares of IDBI Bank, which he has bought at 46. He also has investments in Tata Power, where he has 50 shares bought at the rate of 140. He's a long-term investor now and wants to know that, if he has a time horizon of up to 3 years, should he remain invested in both stocks or not? Parthiv?
Good afternoon, Sumaira. See, Sumaira, I think firstly, if I were to talk about IDBI Bank, here I believe there is a development of a special situation. And why I'm saying that is because we know for the fact, since a lot of chatter regarding the government wanting to kind of monetize this particular bank, no doubt, I think a lot of cleanup has already happened in IDBI Bank. This was the bank in which I think we had seen a lot of their reserves were wiped off thanks to a lot of formation of bad loans. A lot of things were written off and a lot of capital was also infused by the government. And now probably it seems that slowly and gradually, I think these banks are cleaned up well. The provisioning coverage ratio has improved. And since the last couple of quarters, we are seeing a good improvement in terms of the lowering of the net slippages ratio. And also we are seeing that the NPAs are coming down and slowly and gradually the credit costs are also coming down. So I think their intent to sell this bank, and especially knowing the fact that LIC had to chip in and kind of do a sort of a bailout, and LIC I think has this as a non-core asset. They have also clearly mandated that eventually they would have a roadmap to exit this bank. I think there will be a lot of interest is what our sense is. So if the gentleman has 2 to 3 years, his entry point has been good in terms of valuations. If I see he's entered at somewhere around 0.8 price to book multiple, which is not very pricey, especially in a banking environment where things are looking up, the credit growth is growing. So definitely hold on, and in between, if at all there is any such corporate action, probably good value can also be created. Talking about Tata Power, we are very upbeat on this, and looking at the gentleman's entry price of 140, which is I think extremely good. And what we feel is that here is a company where over the next 5 to 10 years, they have given a vision statement in terms of what part of renewable energy they want in terms of the power generation, and also they are executing a lot of such projects. And currently, if I look, the thermal power is somewhere around 70% and rest is renewable. Probably by 2025 they are targeting to have almost 60% of the power generation to renewable sources, and by 2030 they are given a target of touching almost 80%. And very rarely a Tata Group company talks about a guidance in terms of profitability roadmap, and Tata Power has talked about a profitability levels of around 10,000 crore by 2027. So again, you're very upbeat, so definitely hold on to this stock.
Okay. Kush, what about you? What's your take on both stocks?
Sure. See, IDBI has been, in the thick of things for the last, few sessions, and it's trading above its long-term, resistance zone of 44, which is a very good sign. I'd suggest hold on to this stock for the first target of 55 and the second of 65. For Tata Power, also I share the same enthusiasm as Parthiv. The stock's been in the sideways, zone for a consolidation zone for a very long time, but it's trading very comfortably above its, long-term averages. Plus, we know the issues around the power sector, so this will actually help the stock. I would suggest, even though he's in a bit of a profit, in fact quite a handsome profit, have a strict stop loss at around 215, where the stock's taken multiple supports. Here, the first target would be around 255, and the second would be 285.
Okay, so Monish, I hope you were listening in to both our experts. The next query that we have is coming in to us from Noida. Satya Srinivas has written to us. He has 600 shares of Dilip Buildcon at 400, as well as 2,400 shares of Yes Bank at 13 and 1,600 shares of Indiabulls Housing at 139. Another long-term investor here. He wants to know if he should remain invested or if he should sell his holdings, and what is likely to be the future of these stocks. So Kush, first to you. Which of these stocks would you be optimistic on, and what is your recommendation?
Well, the most optimistic that I am on is actually Dilip Buildcon. But even here, I would suggest that look at exits as a slightly higher level. The stock has been in a bit of a downtrend, but we're seeing a few bounces, and that's more likely to be a trading bounce than a long-term sustainable bounce. The stock has resistance around 290 zones. If the stock does come to those levels, it's best to switch and maybe switch to a better alternative in the realty space if he wants to be. As far as Yes Bank and Indiabulls Housing Finance go, well, both the stocks have been in the thick of things, especially trader favorite for a long time, but they've not seen the kind of returns that the investors would want to see in their portfolios. Here, my suggestion would be to make a switch. As far as Yes Bank goes, if he doesn't want to go with the big boys, then IndusInd Bank or Bank of Baroda perhaps would be a better option for the long term. And as far as Indiabulls Housing Finance goes, a similar switch could be in LIC Housing Finance or even Poonawalla for that matter.
Okay. Parthiv, I don't think you are tracking Dilip Buildcon, but for the other two stocks, Yes Bank and Indiabulls Housing, what would you recommend?
Sure. So Sumira, basically I fully agree with Kush that Yes Bank and Indiabulls Housing Finance are kind of at the best trading bets. No doubt Yes Bank has been in the news of late. They approved the JC Flower Asset Reconstruction Company's offer for their NPA loan portfolio of almost 46,000 crore, which is a very good sign that, it also shows the intent of the bank, especially with a lot of investors after chipping into this bank are wanting to clean this up. And as a franchisee, probably there's a lot of hope that this can be turned around and turned around well. And also they've shown intentions in terms of monetizing their stake, and there are very good interest from private equity firms. All these developments are good. They're building a capital cushioning as well. But our sense is it'll take a long time for seeing a major turnaround, because still I think there's some doubt in terms of some sort of legacy assets over a period of time that they would have accumulated could fall into an NPA. So I think that's an overhang and uncertainty which always plagues these such plays to get re-rated. So Yes Bank at the best is a trading bet and probably sitting on reasonably good profits. So not a bad idea to switch into some other names, maybe a regional bank, something like a Federal Bank, or if he wants a frontline name, something like a Kotak Mahindra Bank. Indiabulls Housing Finance, again, I think stays extremely volatile, very difficult to gauge its housing finance book, not as transparent as something like an HDFC Limited or for that matter LIC Housing Finance. I think we would prefer those two plays over Indiabulls Housing Finance.
Okay, up next, Sai Ganesh Kosuri has written to us from Orissa. He has 80 shares of Balaji Amines at 920, and he says as of now he's making profit and quite a bit. So he wants to know, should he invest it or should remain invested, or should he take money off the table right now, Parthiv?
It's a very interesting stock, because in the entire chemicals pack, this particular company, along with likes of alkyl amines, are the two major duopolies in the aliphatic amine space. And even Balaji Amine has very good capacities of ethyl amines, methyl amines. Acetonitrile also is something that they have worked on, and they are working on a lot of more downstream. And again, here what we see is that after peaking out in terms of valuations and in terms of margins, I think the stock has corrected a lot from its peak. And the good thing is that they have a pipeline of capex to almost increase their fixed assets by almost 60%. And in terms of capacity, they are adding almost 120,000 tons per annum sort in the amine space, which will help them to get long-term contracts with their clients as well. No doubt, alkyl amines is also something that we like and kind of would prefer over Balaji amines, but I think I would suggest that this space is looking good, and over a period of time, I think this can make good returns even from the investment price that the investors invested in.
Okay, Kush, is this a stock you like, and what is your target here?
Oh, absolutely. In fact, first up, I'd want to congratulate the investor for buying it at such brilliant levels, and most importantly, holding on to this for all the upswing and all the journey. So my congratulations on that. But at the same time, it's prudent to have trailing stop losses. Since he's a long-term investor, I'll give slightly a broader range. 3,200 is where the stock 200 DMA is. Going forward, also as the stock goes higher, you should have 200 DMA as his trailing stop loss. If the stock ever comes to that, he'll still be making a handsome profit. As far as the targets go, 3,900 is where we look at the stock as the first target, and 4,400 as the second target.
Okay. All right. The next query that we have is coming in from Raghavendra Hebbar. He has written to us from Bangalore. The query that he has is that he wants to invest in Jubilant Ingrevia for a long-term period, and he also wants to know the technical view to understand what is the right range for the stock. So this is interesting because a lot of people write into us only after they have made the investment, but I guess it's always preferable to take advice before you make that investment. So Parthiv, first for you, what is the outlook for the stock, and for a retail investor, does it have a place in their portfolio?
See, absolutely, Sumira. I feel that things are now looking up for companies like Jubilant Ingrevia, which at one point in time, I recollect the stock had run up to massive levels of almost 800. And back then, the valuations were quoted at somewhere around 32 times. And that was a point in time where things like ethyl acetate and their derivative products, where Jubilant Ingrevia has a very substantial quantity of manufacturing. I think they were doing extremely well. The margins were at peak. And then we saw, I think, a lot of derating in terms of the margins, and along with that came a major fall in the stock. And at current levels, I think what we see is that based on the capacity expansion plans that they have a target of almost 1,500 to 2,000 crore of adding new capacity over the next 2 to 3 years. All these companies are talking about the fact that they're getting a lot of inquiries from their customers in terms of increasing the sourcing, because they are looking at alternate from that of China. So these are very good positive signs. And another good thing is the current valuation. If I see the current valuation is quoted at around 20 times, which seems to be reasonable, and the management has talked about on their con calls in terms of foraying into more downstream products, which will always be margin accretive. So diketene and other things that they've talked about. So we are upbeat on Jubilant Ingrevia for the longer horizon.
Okay, Kush, what about you?
Similar thoughts. In fact, and I like something that you said, that, if only people bought shares like they bought the mobile phones, which is research first and then buy. So congratulations to the investor on, this before buying, he's actually consulting. See, the stock's in, a pretty neat uptrend. It's trading above its averages for the last 2 sessions. It's crossed its 200-day moving average also, and on the back of very strong volumes. So I would suggest, this is a good entry point, for this stock. Assuming he is, a medium to a long-term investor, here the stop loss would be 490, and for him the first target would be 555, and the second target would be 600. So Jubilant Ingrevia looks good from the technical perspective as well.
Okay. On that note, we're going to take a very quick break, but there are more queries to answer, and we'll do that when we return. Stay tuned. Hi, welcome back to Your Stocks. Our two experts, Parthiv Shah of Tracom Stock Brokers and Kush Bohra of kushbohra.com, are still with us answering our queries. And the next query that we have is coming in from Mumbai. Jyotsna Prakash has written in. She has 150 shares of Castrol India at 130, 75 shares of Gujarat State Petronet at 232, and 170 shares of ONGC at 120. She's a long-term investor and wants her portfolio to be reviewed for changes, if any. Parthiv?
See, unfortunately, Sumira, not the type of stocks that we like for a long-term portfolio, despite the fact that one might argue in terms of these are all looking like value buys. Even a name like Castrol, where if you look into the trajectory of ROEs and ROC, I think it has been very high. It's been a cash-rich company, but somehow I think the biggest problem with Castrol has been the dwindling market share. We have seen a massive derating in the stock, and probably, if I'm not wrong, the stock has done nothing in terms of any sort of value creation for shareholders over the last 7 years, despite the fact if I were to include the dividend income as well. So still, I think I'm not seeing any green shoots in terms of any change of strategy or any sort of aggression where they're reporting any sort of volume growth which justifies any sort of market share gains, and the competition is heavy in the lubricant space. People like Gulf have done extremely well. And again, I think despite the fact that the base oil prices are coming low, at the best it can improve margins. But no such triggers for Castrol to re-rate is what our view is. So I would avoid this counter. Same is the case with GSPL. We know for the fact that even a pipeline company like GAIL has really failed to kind of create any sort of shareholder value because of the pricing regime in terms of the LNG prices at which they procure. So even GSPL is sailing in the same boat, and I would like to avoid this counter as well. Talking about ONGC, what we witnessed was, despite the fact that oil had gone to as high as $130, $140, still I think ONGC did not kind of re-rate to levels it should. And then we heard about the windfall tax, and which was implemented, and again the problem with ONGC being that all the amount that they can spare for capex went into the taxes. So again, the roadmap is not at all looking good, and now that the oil prices are looking lower, I think this is a counter that I would prefer to avoid.
Okay. Kush, what about you? How would you review this portfolio, and what are the changes you recommend?
Sure. See, none of these are actually very big movers, as Parthiv has already mentioned. So what I would suggest is hold on to these, with stop losses, some more favored than the others. So, as far as Castrol and GSPL go, these can be held on. Castrol, the stop loss would be at 1110 for an immediate target of, let's say, 120 to 128, these kind of zones. As far as GSPL goes, 235 is a level that I would watch out for. So my stop loss would be at those levels. Here the stock could run up to 255, 265 zones. So these are the levels that I'd watch out for. ONGC, however, is a bit of a concern. It's seeing what we call as the descending triangle pattern. Here 130 is a very strong support zone. If it breaks, then it could actually go to as low as 120 also. So not very gung-ho on ONGC. If the investor wants to hold on to these stocks, with these stop losses I just mentioned.
Okay, fair enough. Up next, Luke Joe has written in from Kerala. He has 26 shares of RBL Bank at 91.78. He's making a small profit, but he wants to know, should he remain invested in the hope that there could be a much higher headroom, or should he switch to some other stock which could probably be more profitable? Kush?
Well, he's spotted a very good trade at very good levels. But I think, if it's a trading bet, then the move's already kind of played out. The stock did run up, quite sharply to 135 zones, 133, 135 zones. But from there, the stock's actually been, a little sideways. As far as the banking sector goes, there's a lot of, action in a lot of other shares. So if it's a trading bet, it's a very handsome profit, and, he should take it off the table. Something, where he can park this, this capital is IndusInd Bank or Bank of Baroda if he's looking at a smaller rung of banks. So RBL Bank, I think the trading move is over for now.
Okay. Parthiv, what about you? Is there a long-term bet here, or should he switch elsewhere?
See, I do agree that, it's a good idea to switch from this bank, because RBL Bank, since the last many quarters, I think they've been disappointing in terms of what they've reported. And in between, I think what we realized is that this bank, despite having a lot of fundraising done previously at high equity valuations, yet going ahead will need some sort of funding. So that is where we are concerned about. And still, I think in terms of the asset quality, there's no much clarity in terms of where they're headed. So I think it's better to switch on to the other banking names, because banking as a sector overall is looking good. And these are the times when the struggling banks will not be able to garner more market share, rather they'll be losing market share, and other names would be garnering market share. So if he's looking for frontline names, then we are more comfortable with Kotak. And if he wants a high risk, high return sort of an aggressive play, then maybe something like an IDFC First Bank looks good, especially after what they've reported in the last couple of quarters and based on the guidance that they're given for the rest of the year.
Okay. The final query today comes in from Meena Deshmukh, who has written in to us from Satara in Maharashtra. She has 20 shares of GR Infra at 1400. So she's making losses currently and wants to know, should she remain invested, or should she look at, just biting the bullet right now? Kush?
I am not quite enthusiastic, by the pick here. That's because the stock's actually, shown some promise and then just given it all away. So, I can understand the plight. What I would suggest is have a strict stop loss at 1230. That is where the stock has a very strong support. If this breaks, then, it's a good idea to exit. If, however, the momentum does build, then the stock could, move up to 1350 odd levels. But then again, the chances look bleak because, we've seen selling pressure at every rise. So, as the strategy goes, have a trailing stop loss at 1230. If that breaks, the trader should exit from this one.
All right, gentlemen, thank you very much for joining in and for advising our viewers today. With that, we're going to wind up on the show for now. Thanks very much for watching, but do stay tuned in. The team of Closing Bell joins you next to take you through the last hour of trade.